Hello, everybody. It is Tuesday, April 20th, 2021, retirement income options. I'm putting together a slideshow for you to make it a little easier to follow along. I'll actually put this inside of the retirement income options article in a couple hours for you to download and work with if you want to. Very simple explanations, and then we'll go through some charts. Why do we sell cash secured puts? Reduce the net risk of a stock otherwise purchased at today's price, and increase income as some puts expire unassigned. As I've told you before, in general, I want my puts assigned to me because I am generally selling them when the stock is oversold. And when I can find something that's oversold on a daily and weekly, I'll generally just buy. But if there's a difference between the daily and weekly indicator and I want to get a jump just in case something changes, then I can sell a cash secured put. So in case you haven't really understood what this means before, this is from Fidelity. In this case, they're considering a $3 premium that you received, which means that on a $100 stock, you're still even at 97. You don't start losing money until the price of the stock goes below 97. Pretty simple. So if the stock price is over 100, the option just expires and you keep $3. If the stock price at expiration, and sometimes shortly before, is below 100, the stock can be put to you, but you're still profitable from 100 down to 97 because you collected $3 in premium. If the stock goes below 97, now you're a little bit underwater, but, and I know this create some angst for people, the reality is that your other option was to buy the stock at 100. So even if it's put to you when the stock is trading at 95 or 94, 93, you still saved these $3. So what's the difference between cash secured puts and covered calls? A lot of people say they're the same thing, but that's not true because of the nature of the market. Stock market goes up 70 to 80% of the time historically. And we know, as good traders, that we want our winners to run. We want to ride our horses, our champions. So in general, I don't like to write very many covered calls. And if I do, it's only on a portion of the position. So a cash secured put is designed to get the stock to you. It's designed to get you into a stock. Covered call is designed to get you out of a stock. In general, we have a stock that gets overvalued and overbought. Do we really want to screw around with writing a covered call, or do we just want to trim some of the position? In general, we want to trim some of the position. We can write a covered call on a part of the position too, but if our risk is 20 or 30%, which is pretty common for an overvalued, overbought stock, and we know that we're not going to get a premium anywhere near 20 or 30%, generally we trim a little, and we can write a covered call against part of the position too. And that requires you to have several hundred shares to be able to do it that way. Back to the cash secured puts, because the stock market usually going up 70, 80% of the times, a lot of the options expire, just leaving the premium in your account. Other times, because of the aggressiveness of the option, how you design it, you may set it up with the premium a little bit lower, meaning the strike price a little bit higher, increasing your chances of getting the stock put to you. So depending on how you design the option, you can make it more or less likely to get put to you. So if you have the strike price close to the current market price, you actually have a higher premium. If you put the strike price further out, lower, you get less premium, but less chance of the stock being put to you. So when you design your put strategy, you have to decide, how much do I want big premium? How much do I want this stock to likely be put to me? In most cases, I will sell a stock close to the money because I'm waiting for it to be oversold in the first place, which means it's close to where I'd like to buy it. And that premium is the juice that I get over the next month or two, so that's about how far out we go, for a rapidly declining time value at that point. And if it gets put to you, great. It's, again, lower than the price would have been if you just bought it today. If it does turn around and start going up, hey, you get to keep the cash. So let's look at some examples. First off, let's take a look at some screeners. I'm not putting all this data into the articles anymore because I just don't think it's all that helpful in a spreadsheet, and it's more busy work for me. So again, I encourage you to have TradingView if you're going to do any type of option trading, because the ability to change the views from daily to weekly to hourly or 4 hours, or to occasionally take a look at the month periods, is just so handy that once I learned how to use this screener, I was like, wow, I mean, that's worth the price of admission right there. It really is. I mean, the charting is nice, but this screener, I haven't found a free one online that does this. And I don't know what the free version of this does, so you should check to see. You might be able to get quite a bit of this for free. But these oscillators, which is a great group of oscillators, there's not much else you need to do. I mean, you can look at income statements and margins. I mean, these are ETFs, so those numbers aren't up there. You can look at all kinds of stuff, but this oscillators and the trend following to an extent are pretty interesting. Give you the traditional buy and sell signals. You got to remember, you're looking for divergences in most cases. Price and some signals going in one direction, then other signals leading by heading in the other direction. It's called a divergence, right? Kind of like the force. There's a divergence in the force. That's what you're looking for. So I want to just take a look at the TLT chart real quick, because I think it's kind of interesting right now. And I've showed this recently as well, but I enhanced the chart. But what do we have here with 10-year Treasury and TLT right now? Aha, big red-eyed alligator. So when this rate bottomed out near zero, what did it get down to? 56 basis points, something like that. People are like, oh, we're going to have low interest rates forever and free liquidity forever. And just as they decided that was a new paradigm, starts to nibble. Now, I believe this can come back in either direction. And here's what I think. I think people are so silly in their views on inflation that they might push this back up. And if the 10-year Treasury goes over 2%, and especially if it approaches 3%, means the alligator will start to close his mouth. You know my view on inflation. I think that it is a very temporary thing. The secular trend, which is going to last for decades and is extremely powerful because it's based on the aggregate population, the demographics of aging demographics, is that deflation is the boogeyman. Counter-cyclical policy, which is trying to create inflation, is fighting a ghost that's going to be around for 20, 30 more years. And then when you take a look at the population curves, you realize that the population of the planet is starting to level off. Doesn't mean it's not going to keep going up, but it's not going to go up at the pace that it had in the past. Why? Because as more people enter the middle class, become less agrarian, we don't have as many children. Also, and this is just facts, families that are more religious tend to have more children. And we know that the trend is for families to be less religious. In fact, for the first time ever in the United States, less than half of Americans identified with a church. It's almost exactly 50-50 right now. And you have closet religious people like me who respect my Catholic upbringing, but I haven't been to church other than funerals, weddings, and a couple holidays in a decade. I don't go every Sunday, and most people don't. Most people that do are past their breeding years. We need to understand these things because when you hear people out there saying hyperinflation is coming, they don't really have any goddamn idea what they're talking about. As I've said before, very simple math equation is what would it take to get a doubling of the price level? You have to double the amount of money out there. We haven't done that. Could there be a one-time step up in inflation that probably drizzles back down over time? Yeah, because what I believe has happened is that the helicopter money that I've talked about for years that would be necessary in the later 2020s or around 2030, I believe the pandemic was used to get a lot of that helicopter into the economy early. We're pumping so much money into the economy that really only the direct retirement system is going to have to be bailed out now in the next decade. It used to be the idea was a lot of things would have to be bailed out, and we'd have to dump money into infrastructure, which we're 30 years behind on. You take a look at the deferred maintenance of our infrastructure numbers, what you realize is that we've been giving tax breaks instead of fixing our infrastructure for 20 years, really. And even under Clinton, we didn't do as much as we should have. So when you take a look at the last 40 years, going all the way back to Reagan, and what you realize is that the deferred maintenance of our infrastructure is so far behind that a $2 or $3 or $4 trillion package to fix it is actually deficient by somewhere between 10 and 20 trillion dollars. So there's a pull forward, push back sort of thing that goes on with policy, but the demographics remain the same. You can't change those. So you have deflationary demographics. Technology is disinflationary. Disinflationary is different than deflation. Disinflation just means that it counteracts inflation. And with technology, the reason that happens is because of how productive it is. And we're about to see a major boom, major uptick in disinflation, an offset to inflation, because even if demand goes up, it's not going to take that much because of automation and AI to produce more. We're actually seeing that in industry. The only place that we're really seeing inflation is in some home building materials. Any food inflation is typically climate change related, and I don't know how we fix that other than growing more in greenhouses. But there's actually a surplus of food on the planet. We're just jerks about getting it to everybody. So you have to think about TLT here because it has a very significant impact on the stock market. If these interest rates go up and money becomes less available, less liquid, right? More expensive to borrow, that means the stock market's in real trouble. Now, I don't think that should happen, but the world doesn't consult me. Only really smart people pay attention to me, like you. And what we're going to see is probably the inflationistas pounding the table with stupid narratives, get people all into a frenzy, go, I'm seeing hyperinflation, boots on the ground. Farmers' words, bullshit. What you're seeing is the temporary impact of cyclical policy, counter-cyclical policy, jam-ups in the supply chain as they shift, that weird thing that happened in the Suez Canal, an unusually high demand in the past year because of the pandemic of people to do home projects. I will tell you, in the height of the pandemic, I was seeing more people at Home Depot, Lowe's, and Menards. Menards is the regional by me that I'm seeing there now, and it's spring. I'm a big garden guy, so I usually go to these places in the spring. They're less busy now than they were last June, July, and August, which is highly unusual. I actually think that some of those stocks are ripe for a very big correction. I think you can see Home Depot drop a lot, 20, 30, 40%. Why? Because if liquidity tightens up, people will do less home projects. And then suddenly all the increased supply that people are trying to bring to market will be met with falling demand. There's only so many home projects that people can afford to do. And if money isn't as cheap, they'll put them off. So you have this ebb and flow back and forth. And you have to think about how does that impact you. So I wanted to cover that here today because it's important. and how you think about the stocks that you buy and sell. So what's the number one thing that we think about when we analyze the market? What is the big what? What type of trend? Secular or cyclical? Secular trends. Number one thing that we think about is the big secular trends. Things that are going to last for a very long time, like deflation. And then we meet it with counter-cyclical policy to try to offset that. That's why that's not too important right now. The day could come where it is. But as Dick Cheney said 40 years ago, that doesn't matter. Because they knew 40 years ago, when they changed the nature of U.S. monetary and fiscal policy, that for decades and decades and decades, we'd be able to print money. And that's not going to change, because when the crypto dollar comes and regulation of Bitcoin happens, it'll be the crypto dollar transacting international exchange. So let's take a look at one of the big secular trends other than deflation. And that is the shift to clean energy. So we pull out our stock screener, we set it to ETFs, and there's a way to do this with your tagging. You say, okay, this is the weekly chart. TLT still oversold, even though it ticked the other way. We get to the Chinese stocks, but we don't really care because they're commies. And you get to a couple of clean energy funds, PBW, TAN. There's a few others on here, iClean, PBD, which I'm not recommending anymore. I mean, why would we? We have these three that trade in the billions. You say, okay, so as a group, the clean energy funds are almost oversold on a weekly basis. That means they're getting close to a bottom. Then we take a look at the daily, and we see that PBW is very oversold on a daily basis. Some of the other ones are pretty oversold too. So what do we want to do with that? Well, it's oversold on the daily. It's almost oversold on the weekly. It has strong support in the 70s, right? Very strong. So you see the huge buying pressure that's going to develop in here if it gets that low. This is what propelled it the first time. So people are taking profits on the way down. And it could overshoot, right? You always have the event-driven market. It could come lower. It could get into the 50s. It could. But I think there's a lot of institutional money out there that would like a redo. And I think that that's one of the things that you should be thinking about is the chance to have a redo on a lot of these things that you would have loved to have bought a year ago that maybe you didn't buy or you didn't buy enough of. And where you can find a secular trend that's on your side, you can take a chance at the redo. So right about now is when you want to start scaling into PBW. It's down to 82.90 right now. So if you can sell the $78 June put for over $4, I think you're probably in pretty good shape. Why? That's pretty big support in here. This looks like a level, bounced off, hit, went through. I think it's going to be difficult for the price to get much lower than the middle 70s. It's not for sure. If liquidity tightens up a lot, come down lower. But I don't know that we should believe that liquidity will tighten up a lot. I think it's just going to tighten up a little. And then there's this wild card of Bitcoin. If they regulate Bitcoin, a lot of money is going to come out of Bitcoin and it's going to look for a new home. It's probably going to look for a home in the things that were hot and they have a secular trend on their side. And technical traders are going to be looking in this range. This is a place where people can load up. Doesn't mean that it can't get down here. And if it does, don't panic, just buy more. And remember, when you scale in, you don't do it every buck. You do it at the key technical levels. So up here, to get a starter position. Here, you get a significant hunk. And down here is your, got to add more to average down. You average down at pretty big intervals. These people who buy because it dropped 1% today, unless you're some sort of short-term trader, it's a bad idea. But this is the sort of thing that when we redraw this chart, whenever this correction is over with, you're probably going to get a target price way up here towards 200. Why? Because the growth is that fast in clean energy. got 20 and 30 and 40 and 50% growth rates that are sustainable for the better part of a decade, especially because of what the Wall Street Journal called the stealth Green New Deal. You're going to get over $1 trillion in the green energy projects, clean energy projects. And you're probably going to see a carbon tax. Carbon tax is the one thing that I think is almost certain to happen, because setting up exchanges, enough of the progressives understand it's just a way for Wall Street to steal that money. A straight carbon tax generates revenue and moves the needle in the direction of carbon neutrality. Simple, it works, and it raises money instead of being a subsidy that costs money. Just penalize the things that you don't want to have happening anymore. So I think that $78 June put, you could go a little lower, you could go a little higher, depending on what you want to have happen. June over $4, get you a price in the low to mid 40s. I think this is a good one to do. Discovery and Viacom, we've talked about now for the last couple of weeks. So let's take a look at the stock screener. That's how you do that. You change the tag. So I have the stocks tagged in red and the ETFs tagged in blue. You just tick what you want to look at. What you see on the daily is that Viacom is oversold and Discovery is oversold. If you flip it to the weekly, Viacom is almost oversold. Discovery is right in here too somewhere. Discovery is at 46. So oversold on the daily and almost oversold on the weekly. How does that look on a chart? Well, so here's the weekly chart. You can see institutional selling is winding down. See how volume came down. On a daily, you can really see how it's leveling off. And again, volume coming down. Why is volume coming down important? Because it means that there is less panic. This is where the value shoppers are going to start coming in. You'll see every now and then, you'll see a kind of a bigger up volume tick. And that's somebody big accumulating shares. As I've said, Discovery is a takeover candidate. So I could see somebody swooping in and buying up 9.9% of the shares. You really would like to get into Discovery at these prices. So selling a put, pretty interesting idea. Same thing with Viacom. Nobody's going to buy out Viacom, I don't think. But, I mean, they're right at major support levels. So if you haven't dived into Viacom and CBS, Viacom, CBS, and Discovery, it's time to do that. So Discovery, I think you can sell a $35 June put for over $2. Viacom, a $36 June put for over $2. They're weirdly kind of almost the same charts, same prices, slightly different stories. I covered that in the Stocks of the Week article. If we take a look at some of these other ones, take a look at SunPower, big secular trend, my favorite one in the clean energy space because of the backing, the big financial backing. I think you're starting to get a redo on this one too. Chance to buy this up in steps, and then it's zoomed. So the steps are what you pay attention to. These levels where it levels off. So right in here, I mean, I think we're right at the point where you probably really want to build this position. So we take a look at SunPower, say, okay, what's near the money for something that's oversold that I'd like to add to? You say, well, there you go. So any put between 25 and 23, you can get a pretty good premium. You have to decide what price you want to put to you at. I don't know that it's going to get down to 23. Seems like it might move in that direction right now. We saw that it was oversold in the one screen, the daily. See all these ends for neutral? This is a good thing to look for. When all these are going neutral, these are still on sell, that means that the next thing to happen is for these to turn to neutral. So since the trend was already down, these are the divergences. These are the ones that are flipping from sell to neutral. That means these are going to flip from sell to neutral soon. If the trend had been up, then that would mean these were coming from buy to neutral that this was going from neutral to sell. So direction is important. So only the trim one was up here. That was a pretty good call, right? I'm telling you, this step right here, that's awfully strong support starting, because these lines will move up. Again, unless there's an event, something weird, something powerful like that. So what are some other ones we can sell? Well, we'll take a look at this. Let's take a look at Barrick. Let's take a look at MP. Right, this one's starting to break out. And again, this is part of the Bitcoin story. Bitcoin gets regulated, and there's a crypto dollar, and both things aren't ifs, they're whens, right? This is a when question. When is Bitcoin regulated more, and when is crypto dollar introduced? We know both things are coming, probably big announcements by the end of the year, if not sooner. So if you already own Barrick Gold, I think you can just keep selling the puts behind you. If it gets put to you, then you have more for a little while. You just, trim out of it as you get to. But honestly, if you had a big position in Barrick Gold, 3, 4, 5, 6%, because something gets put to you, I don't think you should break your heart. And this company's going to pay out a bunch this year. We've talked about that before. They have special distributions because they sold some assets. Essentially, the dividend looks like 1.6%, but really it's going to be closer to 4%. Because part of what they're paying out isn't dividend, it's a return of capital from selling assets, which means not even any taxes on that. Which ones do we want to sell? Again, just look at near the money, that's all you need. I think June is what you can look at. I think you can sell the 22s here unless you've already got a big position. MP Materials, I think those 25s are pretty juicy, because as we've talked about before, big support for MP is down here in the low 20s. Definitely could get to here. It has to be a whole lot of angst to put just below 20. And it could. We've seen a lot of these get beat up. A lot of these SPACs get beat up. But this one's already getting institutional buying. So I think prices in the low 20s are really going to get hit hard on the bid. They're just waiting for the momentum to wear off. So if we go up here to MP, see these are starting to flip already. Doesn't mean it can't keep blowing off, but if you have no position in MP, those puts are starting to look pretty interesting. What else? Barrick, MP, on track. There you go. Let's take a look at on track. So on track, again, the downside is starting to wear out. See? And that one's even easy. This is a really easy one to look at, right? The downside is starting to wear out. Right at this spot here where you had some resistance. So it's turning into support. And there's institutions that want this. Again, see the selling pressure wearing off, right? Big selling pressure on the Aetna announcement. Volume just keeps coming down. You're running out of sellers. It's an important lesson, running out of sellers. Starting to run into strong hands now. This is where you want to accumulate this. Again, go back to on track. Near the money. I'm looking at June's right now. I think $25 for over $2. Pretty interesting, right? You could go lower if you wanted to, if you're just a little scared. 25 or 22.50. All right, any questions real quick? I will put these charts for the other stocks in an article this afternoon. And I just think that this picture helps you a lot. Plus, this is something easy. This is something for me. I can do this every week. Somebody asks about Ford. Okay, well, so let's take a look at the screener. Pull up Ford. A lot of neutrals. This is on the weekly chart. So let's take a look at Ford. I think you're definitely in redo territory, just about in redo territory, right? This seems to have been resistance and then a tested support. Wouldn't surprise me. See some big buyers coming here. So I think selling some puts is pretty interesting there. And for all of these trades, you get $1 for the $12 June put right now. Well, it's at $11.50. So you probably want to go with the $11 put. If you already own it, definitely go below, right, out of the money. If you don't own it, in the money is fine. take a look at, flip this over to daily. Oh, this is daily. Okay, so daily, not quite oversold, but darn close. Weekly, still have some room to come down. So I'd be looking at those 11s. One thing that you could do is do the 11, but set your price up near $1, right? To coincide with a $10 price. So this is where it's zoomed up. In fact, I like that a lot. Board for a June 11 at $1. Let the volatility bring it to you. Somebody asked about Quidel, weekly chart, hanging around. See, now it's jitterbugging. So that might be close to a bottom. Flip it over to daily. So this is basically oversold on daily and weekly. Yeah, I think that this is probably a pretty good one too. And again, they're talking about mergers and acquisitions openly. I mean, I think they're going to merge with somebody. Maybe sell that 110, get almost 7%. That's about 9 weeks out, 10 weeks out. So consider it five periods in a year. So I mean, you have a return and annualized return in over 30%. Right? We talk about that. How many weeks out are you going divided by the weeks in the year? Tells you how many times in a year. Just shorthand math. I mean, you can use a calculator too. I just do it in my head. So we're actually 8 weeks from this expiration. So that would mean there's 6 periods in the year. If you're getting 7% times 6 periods in the year, annualized somewhere up from the 40s, that's a good annualized rate, right? The way that this one moved, right, and last year just shot up. Huge volatility. In the market, I'll be honest with you, I think there's so many bad investors out right now that's kind of blowing my mind. Take a lesson from energy, though. Energy has nothing going for it long term. And they still bid this thing all the way to zero, all the way to nothingness, and then bid it up, and then beat it down, then bid it up. What was I telling you a couple of years ago? Is that the traders were starting to gain a lot of power. And it happened more extremely and faster than I thought, which is the story for almost everything, faster and more extreme. So energy is going to come back down here again, and then probably break through and go lower, unless some of those companies go bankrupt and the nature of the index changes. But you're for sure going to get a test down here. So if something with no positive long-term secular economic strength can go like that, right? Anything can. They can push these all over the place. They changed. So, I mean, just understand how powerful the traders are right now. Let the extremes get close to extreme, right? Let your prices get close to extreme. Then look for these consolidations to start taking hold. Now, I don't know if these will get bid up as fast. I don't think that they will. But as long as you're not buying big downward momentum, I think you're in pretty good shape across the board. I don't think I'm going to take an opening position in Quidel. I always forget how to say it. I think it's Quidel. But I would sell puts in the right accounts. And I'll tell you, you have to decide how long you want to wait for this one to come back. I don't know when they're going to do a merger. I don't know when they're going to get bought out. The management's been pretty explicit about that's coming. And in my head, when the car companies tell you that they're going to build EVs and move away from gasoline, when the government tells you that we're going to move away from fossil fuels, if people still don't believe it, that means that you just have to decide how far out ahead of reality smacking enough people in the face and understand that traders don't really care about fundamentals, which is why I tell you all the time, when people like Avi, who outright says he doesn't care about fundamentals, starts to give you a fundamental narrative, and he's pretty straightforward about it, is that he doesn't care. But some of these other folks who are just lying to you, here's the narrative. This is why this went up or down today. It's just not usually the case. We pass through equilibrium in almost everything. We almost never hover around equilibrium. And when we did several years ago, we were hovering around equilibrium. I wrote an article that said we're at kind of a weird equilibrium. We're holding equilibrium, which is unusual. Usually we oversell or we overbuy. And the traders love that. For whatever reason, huge portions of the population invest in the stock market, mainly through retirement plans. They have no idea what they're doing. They just panic once in a while. They panic sell, they panic buy. And I can't tell you why human psychology hasn't changed more to be more rational, but it hasn't. There are moments when we act rationally, but all the narratives out there, from the news to the blogs to everything to religion, are all based on emotions. How do you manipulate people to spend the way that you want them to spend, to do the things that you want them to do? That's what a lot of the world is. Remember my grandfather's advice: if you want to know how things work, follow the money. And I think that comes into play in a lot of this stuff. So with this one, what is the real value of this company in a takeover? Take a look at the EBIT, the EBITDA, or the EV to EBIT. Take a look at those ratios. EV to EBIT, it's got to be under 8, around 8. It's probably the right value. That'll tell you what the real valuation should be. Then compare it to the price. Then ask why it's not about the same in many cases. It's just emotions. I mean, did the value of this company change like that? No. So what is it really worth? And what is it worth in a merger? All right. These types of videos will no longer be on the YouTube page visible to the public for about a month. You will be able to see them through the links that I put in the chat. So rather than me charging to keep people off of these, I'm just not going to make them visible to the public for about a month. So you'll go up here in stocks of the week. This one isn't showing up right now, but the link is in the chat. So you can still get to it. But to get the most recent stuff, you need to look at the chats. All right, have a good day. And I'm going to probably go take another nap. I still have a very sore head from getting that lump removed. I had a cyst. I don't wish it on anybody. But all right, have a good day. I will see you later. I'll get all these articles and videos edited and posted sometime today.